I have recently come across this absolutely magnificent trading indicator on TradingView, and it gives signals based on breakouts. Now, this isn't just some random indicator you've probably bumped into before in your trading journey. This one's got a really sophisticated algorithm behind it, designed to detect possible signals so you can catch every opportunity possible with a super high win rate. And the best part, it works on stocks, Forex, and even crypto market. Also, it does its job accurately across every time frame, from the 1-minute chart all the way to the daily. So yeah, let's not waste any time and dive into this awesome indicator. To bring up this indicator on TradingView, you just need to go to the Indicators tab and type in Multi-Time Frame Trend Analysis. And as the name already hints, it is a multi-time frame tool that gives you really precise data. So once you click on it, the indicator will instantly appear on your chart in its default form. The good thing is, it's actually very simple, because it only has two parts, a trend following band and some tables, which are less important. If you double click on it and head to the Styles tab, you can uncheck the tables, since you won't really need them that much. Then when you go to the inputs, you'll see settings related to different time frames that you can adjust depending on the asset you're trading. Along with that, you'll notice 5 EMA values, which make up the structure of the band, and this part is extremely important to pay attention to when you're opening positions. So finally, this is the indicator we're going to use. One of the most important things about it that really helps us a lot is the fact that it actually works as a strong dynamic support and resistance level, since it is built from 5 different EMAs with 5 different values. And because of that, you can clearly see moments when the candles break through the band and it turns purple, which usually means the price starts moving down sharply, and that gives you a solid short opportunity. Then right after that, when the candles change direction and break above the green band, it signals a momentum shift, which means the candles start pushing higher and making new highs, giving you another strong long opportunity. Trading with indicators can sometimes be challenging, because every single indicator, no matter how good it is, comes with its own flaws. When we talk about this indicator in particular, there are some times when fake breakouts happen that don't really change the market direction, and this can definitely be misleading. But generally, the way to avoid or at least detect fake breakouts is either by applying price action techniques to spot the possibility of a trap, or by combining it with another reliable indicator to minimize the risk. And in our case, we're going to use both of these factors. Just head back to the Indicators tab and type in Ichimoku Cloud, which is one of the most famous and widely used indicators in the trading world. Once you click on it, it'll appear right on your chart. For some quick modifications, just open the indicator settings, and in the inputs, you don't really need to change anything. But when you go over to the Styles tab, you can uncheck all the items. Just leave the black background, which is basically the cloud itself. From there, you can even change the color of the cloud however you like. The Ichimoku Cloud can actually solve our fake breakout problem, because just like the previous indicator, it acts as a strong long-term support and resistance level. You can see this for yourself. In the moments when candles drop below the cloud, the candles start moving down sharply, and the cloud turns red. And the same way, when candles break above the cloud, it shifts blue or green in default form, and the market pushes higher, making new highs. So when we combine these two indicators together, it improves our win rate. So first, let's talk about the short position criteria. First of all, the candles must break down below both of the indicators, because that's a very strong sign of a complete momentum shift. Then the second rule, it is that we always wait for a valid pullback before entering a trade, since this step alone reduces the chance of a fake breakout and gives us much more reliable entry. For example, right here you can see how candles have pushed down and penetrated through both indicators. This is a clear sign of momentum shift from bullish to bearish. The next step would be to wait for that pullback to confirm a good entry point. And once it happens, you can go ahead and open a short position, setting your stop loss and take profit according to your money management plan. The long position criteria is pretty much the same, where the candles need to break out above both indicators to confirm a complete momentum shift. And then we wait for a pullback entry to reduce the risk of fake breakouts, while also tightening the stop loss as much as possible. In this example, you can clearly see how a big candle has broken through both indicators, which confirms the momentum shift. So at the pullback, I'd be looking to enter after making sure the market is ready to push upward. From there, you can simply open a short position and set your stop loss and take profit targets according to your money management rules. We can actually make this strategy even more effective by adding some simple or even advanced price action into the mix, such as drawing a trend line and connecting all the lows to show the overall direction of the market. Whenever there is a breakout from this trend line, it adds another layer of confirmation to the technique we already use, meaning instead of relying on just 2 breakouts, we now have 3, and that makes the pullback much more meaningful when deciding to enter a trade. Right after this trade, we can also draw a trend line for the downtrend by connecting the major highs and then wait for its breakout. The key point here is that even if the candles break above the indicators, I still wouldn't jump into a trade. Because what I really need is the extra breakout from the trend line, and that specific breakout is what gives a much more reliable signal for the long position. Let's go through some backtests now and see how this technique actually plays out in real market conditions. For this, I'm going to use examples on USD CAD 1-hour time frame. I have slightly modified the multi-time frame trend indicator by doubling all the EMA values. This was a really useful strategy using 2 powerful indicators. One last point you need to consider. I am not a financial advisor, and this is not a financial advice. All content, information, and opinions shared in this video are for educational and entertainment purposes only. Past performance is not indicative of future results. Always conduct your own research and consult with a qualified financial professional before making any investment decisions.